Hello everyone, I am Meghana PS, Assistant Professor in Commerce, Government First Rate College, Bharamsagra. I am discussing about the subject Financial Markets and Services under the module 5th Mutual Funds. In this session, I am discussing about Money Market Mutual Funds, its meaning and purpose of Money Market Mutual Funds. The objective of this session is to understand the money market mutual funds, and at the end of this session, you are able to understand the money market mutual funds. Let's take a quick recap of previous session. In the previous session, you learned about the types of mutual fund on the basis of geography. In that, we have two types. One is domestic mutual funds and another one is offshore mutual funds. Offshore in the sense international mutual funds. And also we seen the criteria for selecting the mutual funds. Let's discuss the meaning of money market mutual funds. Money market mutual funds is an open-ended mutual funds. In the types of mutual funds, you learned about what is open-ended mutual funds. Open-ended mutual funds means here the investors are free to buy and sell their funds or units at any point of time. So those are called as an open-ended mutual funds. So money market mutual fund is an open-ended mutual fund which invests only in money market instruments like treasury bills, certificate of deposit and commercial papers, purchasing agreements like this. They invest in the money market instruments. And these funds invest in short term like 1 day to 1 year debt obligations. Here, money market in the sense they are for short-term investments. So here the mutual funds are invested in money market in the sense these funds are for 1 day to 1 year, that to debt obligations. Money market mutual funds ಅನ್ನೋದು ಕೂಡ ಒಂದು ಓಪನ್ ಎಂಡೆಡ್ ಮ್ಯೂಚುವಲ್ ಫಂಡ್ಸ್. ಇಲ್ಲಿ ಆ ಫಂಡ್ಸ್ ಅನ್ನ ಮನಿ ಮಾರ್ಕೆಟ್ ಇನ್ಸ್ಟ್ರೂಮೆಂಟ್ಸ್ ಅಲ್ಲಿ ಇನ್ವೆಸ್ಟ್ ಮಾಡ್ತಾರೆ. ಸೊ ಮನಿ ಮಾರ್ಕೆಟ್ ಇನ್ಸ್ಟ್ರೂಮೆಂಟ್ಸ್ ಯೂಶುವಲಿ 1 day to 1 year ಅಲ್ಲಿ ಮೆಚುರಿಟಿ ಪೀರಿಯಡ್ ಇರುತ್ತೆ ಅದಕ್ಕೆ. ಸೊ ಆ ತರದ ಇನ್ಸ್ಟ್ರೂಮೆಂಟ್ಸ್ ಅಲ್ಲಿ ಇನ್ವೆಸ್ಟ್ ಮಾಡುವಂತಹ ಮ್ಯೂಚುವಲ್ ಫಂಡ್ಸ್ ಅನ್ನ ನಾವು ಮನಿ ಮಾರ್ಕೆಟ್ ಮ್ಯೂಚುವಲ್ ಫಂಡ್ಸ್ ಅಂತ ಕರಿತೀವಿ. So some of the money market instruments are treasury bills irbodu, certificate of deposits and commercial papers. Let's see the features of money market mutual funds. First one is the aim of money market mutual fund is to provide easy liquidity, preservation of capital and moderate income. Here the money market instruments are highly liquid in nature. They can easily be converted into cash, and also their preservation of capital in the sense here the loss of capital is very less, the risk is very less, so the capital can be preserved. And also the money market instruments provides moderate income because the risk is very less, the income is also very moderate in nature. So these are the aims of money market mutual funds. Next one is liquid investments. So as money market mutual funds invest in money market instruments, they are highly liquid in nature and they can be easily traded with different currencies and maturities. The maturity period of these money market instruments ranges from 1 day to 1 year. So it can be easily converted into cash. Next one is physical trading. Almost all the money market instruments are traded over the counter. It cannot be traded online. So the authorized representative is going to deal with this trading of money market instruments. Next one is it is a wholesale market. So money market is designed to trade in a bulk orders. So the individual investor who has a high capital, he can go individually directly and he can purchase the money market instruments. Next, it involves multiple instruments. In case of capital market, they trade only with a single type of instruments, where in case of money market, we have several instruments and they are differ in their debt structure, maturity period and credit risk. So, they provide a diversified portfolio for an investor. Uh, The next feature of money market mutual funds is key money market participants. As I told, the in money market it is designed for bulk orders. So a individual investor who has less capital cannot afford for that. So many institutional players are involved and they borrow and lend money in money market. Next one is regulated by RBI. As we know that SEBI is the regulatory body for the capital market, whereas the RBI is the regulatory body for the money market. As money market mutual funds are traded in money market instruments, it is regulated by RBI. The rules and regulations are provided by the RBI. Next, invest in safer short-term instruments. As I told, when it compares to shares, these instruments are safer because the providers are having a high credit rating and the risk of losing the capital is very less. So it is a safer short-term instrument compared to the capital markets. And return on these schemes may fluctuate depending upon the interest rate prevailing in the market. Compared to saving bank account, it provides higher returns, but the returns are not guaranteed. The net asset value is going to fluctuate on the basis of interest rates prevailing in the market. And the last one is ideal for corporate and individual investors. The individuals who wants to park their money for some short period of time and who are looking or waiting for a favorable investment, they can park their surplus amount in the money market instrument because they are highly liquid in nature. Whenever they want, they can take back their investment. So it is ideal for corporate and individual investors. Let's see the purpose of choosing money market mutual funds. Why anyone can go for money market mutual funds means it offers convenient parking place for cash reserves. If an investor has an cash and he is not yet decided about his investment, so then he can park his cash. That is, he can keep his money in money market mutual funds for a short term, and whenever he requires, he can take back that amount. So it provides a convenient parking place for his cash. And next one is safety and liquidity. As compared to other options, it provides safety. The capital is safeguarded and also liquidity as it invest in a short-term finances. So it can be easily converted into cash. Next, good place to park the proceeds of sale of fund before deciding on the other fund. The investor who invested in two or more funds, then he wants to change from one fund to another fund. Before deciding upon which fund we are going to invest, they can park their amount in the money market mutual fund. And last one, to benefit their clients, brokerage firms regularly use money market mutual funds to provide cash management services. That is, putting the client's dormant cash to earn the extra benefit. They can park the dormant cash in money market mutual funds and get the benefit of money market instruments. So for these purposes, one can go for money market mutual funds. Let's sum up this session. Money market mutual funds invest in short term like 1 day to 1 year debt obligations such as treasury bills, certificate of deposits and commercial papers. The objective of money market mutual fund is to provide the liquidity and preserve the capital and provide the moderate income to the investors. And also it provides a good place for park the proceeds of the sale of fund before deciding on the other fund. These are the references for your further readings. I hope you understood the concept of money market mutual funds. Thank you all.